Yeah, good afternoon. It's Jim from JAGfx.com. It is Wednesday, the 15th of May, 2024. This video, boys and girls, is just going to have a look at I think it's called the bonus trading system of my new book. So the new book, this one here, Profitable Forex Trading using high and low risk strategies. I think it's on about page 160, 161. There's a system there that I mentioned using trend lines and the QQE Advance. So we'll have a look at it and we'll just go over it and I'll just show you a few different things about it. So I'll bring up the charts. Now, I've already prepared one, obviously. Now, as most of you know, I like the high time frames. So this is the New Zealand CAD Daily chart. Now, at the top here, we just got a blank or naked or basic price chart. So it's just a candlestick chart. There's no need. I'll discuss a few other things after, but at this stage, there's no need to add anything to the price chart itself. Below here, we've just got the QQE Advanced. Now, this is MT5, so this might be a little bit different on MT4. I was going to say nearly MT3. That's a long time since I used that. TradingView. So now, this original system, this is not my system by any means. I'm not claiming it to be my system. There's a guy that used to use it years ago, and he absolutely made millions from it. It was his bread and butter, which basically means it was his go-to trading system for all his trading. He used just a traditional RSI, and the settings on the RSI were 4 or 5, something like that. So by default, I think the RSI has a setting of 14 normally, if you just open it up on your platform. This guy, he was using 4 or 5. Now, I'm using the QQE Advanced, which technically is a more advanced RSI. So there's not really much difference. I'm using the settings of 183, which are the default settings that I use on most of my trading. So it's either 183 or 10.14.2 is the other settings I mentioned in the book. But 183 is the settings we use on this. And for the colors, we only want to see one line. So the slow line here, the color, when you double click on this, hopefully, click on there, you can have none. A choice is none. You can make it black to suit the background, but you just make none. So it's no. And all you want to see is the RSI MA displayed, which in this case is the aqua line. So that's the only lines. The levels, I've got the 65 and 35. So that's the top one here, 65, and the bottom one's 35. So basically overbought, oversold. Now, I could just add the 50 on this list, but because I like it to be a different color, because you've only got a choice of one color for the lines, I just add the 50 in as a horizontal line. So just come up and use the tool here, draw a horizontal line, make it a different color. So we've got the 65, 35, and the 50. QQE Advanced, 183. Now let's just go back in time. I'll just show you. We're not going to necessarily pick a good time on the chart. I just want to pick a time. Now the basics of this is you need basically two things to happen. We'll use this. No, it's not a very good example at all. Just looking for a good example. I'm probably going to cherry pick a little bit here. All right, let's just see if we can find a really obvious one that's, maybe I should have put this on hold. So, well, even the most, this one here is okay. All right. So what you need is a couple of things. So, for example, to take a sell trade, you need price to come down to the below the oversold 35 area. So here we break the 35 in this area here. So it has to come from above. All right, we'll start with this. This is going to sound a bit confusing. So we're looking for a sell trade setup. So we'll look initially for the QQE Advanced to come below the 35 level, which it has here, then to go up through the 65 level. So it's came through, so it's definitely broke there. Ignore these little breaks here, it doesn't matter. It's broke through here, it's came down, it's come back up. Then what we're looking for now to go back up through the 65 level, which in this case it has here. So it's come down here through there and broke up through there. Pretty simple. And I do apologise, there's going to be some background noise here. It's the middle of the day. There's a lot happening around me. I've just moved apartments and there's dogs barking, there's construction. I've got a traditional dance school behind me. So it can be a little bit noisy. All right, getting back to it. So we broke down through here and we broke up through there. Now what I'm looking is for a trend line. Now what you want to do, just go to your trend line tool and you want a trend line from the low and across any lows. So in this case, here's your low here. It's come up and we're looking, so we're only taking into consideration, I only start drawing the trend line when it breaks up through this one. So there's nowhere else I can really place that trend line except across these little lows. So we're looking for these little spikes to give us points to put a trend line. You know, you could get a little bit cute and you could say, well, it's below the 35 there and there's another break there. That's valid. It's up to you. Me, I prefer to go for sort of, if I can, the most extreme low if I can. And it's just a matter of playing around with these trend lines. There's no perfect art to trend lines. So there's your trend line. So what we're looking for is a break of that trend line. So in this case, you know, let's just make it a little bit bigger so we're going to make it easier. In this case, there's a trend line break there. It's on that candle there. So we take the sell on the open of this candle. So that one confirms it. And like all of my trading, we're taking the trades on the open of the new candle. We're not taking a mid candle, just like skillful. So on the open of this candle, now it goes against me initially. Your stop ideally would be above here if you're using a stop, above the highs. It doesn't really threaten the stop. And it comes down nicely and back through, down through the opposite level. So, and it's just a matter of trailing the stop down now. So that's not a bad setup, not a bad trade at all. Now we'll just, I wish there was a halfway between this one and the zoom out. Now here's the next signal, all right? So that was a sell signal. Now the buy is the opposite. So we have to have price going through the upside, then down through the lower side, which is the case it's here. So there's your trend line across there. It just needs 2 points, that's all. It doesn't need 3 points or anything like that. I'll go back in the charts, we'll show you a little bit trickier ones than that. So there's your break of the trend line here. So we'll just zoom out again and just see where we're at. So this candle, I don't think it's a clear break. This candle, definitely on the open of that next candle, take your trade and go up. And as soon as it breaks up through here, I'd be tightening things up. So there's your next one. So we took the buy in, it'd be touch and go. I could bring up the data window, but I think that's probably next one, but probably this candle here. So, you know, it's still up to there. It's still, 60, 70 pips nearly. So there's your next move. So we'll just go with the trend line. So sometimes you won't, there we go, stuffed it up. Sometimes you won't get an actual point. See, in this case, it's gone up and it's basically gone straight up. There's no place to put a trend line. So you could consider just going across to this one. You need that gap there. You need a sort of a gap. You need 2 points. It's all a bit narrow. So your trade would be possibly, you could probably get a little bit closer. Definitely broken through there. So open to this candle, take it down through, down to the low here, go again. So that's a sell. That's your, it's your sell. Now we're back in buy mode again. We've gone from overbought to oversold, so we're back in buy mode. You have to wait for the QQE to go through the lower line or the opposite line. So in this case, it's here. I probably should have just used different trend lines so you could see the chart with all the many trend lines. So there's basically a 3 touch there. 1, 2, 3. Look for the break, and up she goes. All right. So it goes up and up to the opposite line. Nice trend there. So let's go back in time a little bit and pick a point where it's not so easy. There were a few good trades there, where it can get a little bit messy. Here's a good example here. And look, in hindsight, we see this big uptrend here. So let's have a look what we could do here. We'll use this as an example, because we've got a decent slow grinding down trend and a nice big strong uptrend. So we'll see how this works. And that there's your first. So we're up here, doesn't come down to the bottom line. We're up here, comes down, and that's touching through there. So your first trend line is going to be across here. See, it's not even a good setup there, so you can't really, you can't do, yeah, you could probably do that. It's not ideal. It's fine, it's valid. So there's your first buy signal in there. So let's just make this a little bit bigger so it's a bit easy to see. So there's your first buy signal. So would be in here. So, no. So it's on the open of this candle here. So I'll just put a little trend line there just so we know where we're at. There's your first buy signal, all right? Roughly in there. So, and obviously this goes against me. And what happens here is price comes, the QQE comes up, still comes up. I'm looking for another break of the downside, broke down through there. So you could either be stopped out or you could draw another trend line like that. So it's coming across the high there and take the trade on the buy. This is a great time to do a bit of dollar cost averaging. You know, like I mentioned in the book, a couple of higher risk strategies where you may do a loss recovery or a dollar cost averaging type entry. So there's your next buy there. So that's on the open of this candle here. So do a copy of this. But I'll say that one, just make sure I've got the right candle there. Confirmed open, yeah, on the open of that one. So next buy would be there. So we've got a buy there, and you can see it's come down again through there. So this is where in a high trending market, this is where it doesn't work so well. There's another break to the upside there. So let's have a look for that one. So that's that candle there. So the open of that candle. So open there, another buy. And again, QQE's gone up and back through the the 35 level. So we can do another trend line. It's just a matter of keep on adding to it, you know, like it's, so there's your next one. So there's your break there. Now it's up to you whether you want to take another trade in here because it's literally on the same level there. So there's probably no point taking another trade there. You've already got 3 trades. Another one in there is really not going to do much. But what happens is it comes back down. That'd be close there. So we'll say that, we'll say this one here came through, so we'll draw another trend line. If that one didn't come through, this one definitely did, and the trend line will be in the same place. So there's your break there. So there's another potential buy setup. So it'll be on the open of this candle here. So you can see we're building into a position. That one there. On the open of this candle. So you've got 1, 2, 3, 4 trades. And in the meantime, you could be hedging. Every time it goes back below the 35, you could take a hedge sell, do the hedging. There's there's different ways of looking at this. So we come back down into the zero. I keep on saying zero level because I'm used to talking about the MACD Platinum or the QQE, the 50 level. We come back below the 35 level again, so we draw another trend line here. Be across there. So there's another buy signal in here. Now, let's have a look, see where that is. Again, you probably wouldn't take that one because it's above the previous buy, but we're building into this position still. And again, the QQE falls below the 35 level. So we've got another trend line here. And you could have taken all these buy trades, up to you, but I'd like to keep it pretty. There's no use taking other trades when you've already got trades in place at that level. So here's the next one. The break not convincing there. You could wait for the break here, which is convincing. Doesn't matter. We'll play it exactly by the rules. So there's your break there. We'll take that one. So it's in that level there. So it's basically on this candle here. Now, whether you take that or not, it's up to you. And so what it does is it just grinds up slowly. So assuming you're taking slightly bigger position sizes, so you may have taken, say, 0.1 lot, 0.3, 0.5, 0.8, or 0.1, 0.1, 0.2, 0.3, something like that. Doesn't really matter. It's always best to increase them slowly. Then as this grinds up, you can just trail that up and start to scale out of these trades. All right. So now we'll look for the opposites. I'll just remove this, make this a bit, move these out of the way. So we've had several breaks. Now we're going to the downside now. So we're taking sell trades. We'll get rid of, just move this out the way. So we've got this trend up. So we can see what's going to happen. So I'm just going to reverse engineer it basically. So I'm not thinking that's a break above, but I'm sure. Let's have a look. 64.992. So it's not a break above the 65 level. So we're down through here is our lowest point. Definitely through there. So let's draw a trend line. So the smart thing is just do this. Do that. That's a smart one. If you want to be super aggressive, you could do something like this. Below the zero level and across there like that. I tend, like I said previously, I tend to go for the lowest point if I can. Here's a good touch point, so we'll start there. So here's your first sell. Hang on, confirm on this one, so it's not the sells on the open of that candle there, which is obviously not good. So there's your first sell, not good at all. So QQE comes down and bang, up she goes back through, and look at that, stays above it for a long time. So what we do is we draw a trend line across. So there's our first trend line. I'll keep the trend lines on the chart, right? So we not to cause any confusion. So there's the first one. So you can just give an idea how many trades we're doing. Here's your second one here. Now, is there a break there? You could make an argument there's a break. Say, for example, there is. So our next trade will be, where was it? That one there, wasn't it? So the next one will be up there. Sell trade. So we've got two sell trades on. Again, as soon as you go up through back up through the 65 level, if you want, take a hedge buy. We can do that. We can do the dollar cost averaging. We can do a loss recovery. Yeah, there's many ways of managing these trades. So we're up here. Let's have a look. Now, the problem is a couple of things here. We're already above the zero level, so we're not going to get many. We just have to write this out. Zero level. We're above the 65 level. You know, like before, it's when it goes back up above, I do another trend line. In this case, it's difficult. You could consider doing just a trend line across any new sort of lows. So take another sell in here, for example, which is put you up here. Up higher here, so another sell in there. If you want to do something like that, or wait for something obvious, there's no potential one there. It's still in that same sort of area. Take the sells. You want to just try and recover the losses. when you've got multiple trades like this, you just want to try and recover the losses. That's all you're trying to do. And it grinds down slowly, so it would have taken a while. And again, we're in buy mode here. So we're above, obviously. So let's have a look where we're going to put your trend lines across, sort of across these levels. So yeah. And all it is a matter of getting on the historical charts and practicing these. And you'll see your buy signal through there. Yep. So on the open of this candle here, up she goes. You know, it's a daily chart, so it's 200 pips there. Then we're in sell mode. And there's nothing wrong with placing stops or here's one, we've got a couple of trades maybe. So there's your first one, they've gone through there. So there's your 2 points. Take the sell, that'd be that bearish candle, let's say, that one there. So first sell's there. Your next one is across that one. So your next sell's on this one, and there she goes down. Then we're in buy mode, up. So it's messy. It's the big trends that'll kill you because you basically go on from overbought to oversold. And as we know, a lot of pairs can stay overbought, oversold for a long time. Like, for example, you know, it's hard to get a possible setup there. There's a couple other things I want to mention. You may use something like the 50 level, which is this yellow line here, as a filter. So, for example, say we took a trade in here. There's your 2 points, 2 points. When we're above, below, there's your entry. You may decide to only take buy or sell trades when the QQE, the buy trades is below the 50 level, and when sell trades when it's above the 50 level. That could be a filter you could consider, and you may just aim for the opposite overbought, oversold area. You may use the 50 once price crosses through the 50 to consider closing half, putting a stop in place for no lose, something like that. But if you find a pair that trends well or goes sideways nicely, I'm just trying to look for a bit of a clean part in the chart here. This can be very profitable, but you can be on the wrong side for a long time. Like any overbought, oversold type indicator, you just have to be careful because it can be in a trend for longer than more margin than you have, or more patience if you've got, or more stress levels in your body. You know, like looking at this is a decent downtrend. So I'm just trying to look. There's nothing till we go here. You probably get a sell, maybe, possibly. Even that's not very pretty. Oh, damn, what did I do there? Oh, we had one. So you could consider like a trend line just like that. There's two touches there. There's your break. And just stay in that, just trail it down. But in the meantime, you could be looking for buy trades because we've gone through to that side and down through the other side, obviously. Yeah, I don't know if there's no real points before it goes through the other side. So you'd be looking at this point there. So your entry is going to be, you know, in here somewhere. And again, you're going to be looking at multiple entries. So that's where it gets messy. So there's your next one. And there's possibly another one, you know. So don't be too caught up on these trend lines. They don't have to be exact. Keep on adding. And look, this trend went down, even got up to the 50. Now, whether you had enough profit to get out at break even or close to it, you know, you still be taking trades here. Where's the next one? Possibly across that. You know, there's another one in there. Then back down again. So your next trend line will be across here. And it's normally the wide ones that give you the better profit. They sort of lend themselves. When I say wide, see these ones here are fairly acute angled down. where they start to get wider, probably a 45-degree angle down, that's when you start to get the big trends up. So in this case, you know, you're entering in here somewhere, and that's starting to grind up again. You know, we're down here, we're back up there, so yeah. So I'm not sure what it's like on the lower time frames. It's not something I do, and I've just picked the New Zealand CAD. It's a pair I like trading. You know, you could put this, like, let's have a look. Just have a quick look at some like Euro USD everyone trades. Just have a quick look. It's, you know, you've still got these big moves, trends up. You know, then we've got the, just a matter of getting on the historical charts, playing around. There goes the grinders, playing around with it, and just seeing, change the settings, put the MACD Platinum on the chart, put the QMP filter on the chart, come up with your own filters. But that's the gist of it. So you're looking to go from oversold to overbought, then start drawing your trend lines, then take sell trades from overbought to oversold trend line, at least 2 touches, then start to trade your buy trades. Counter trend trading doesn't always work. Ignore that trend line, but let's have a quick look while we're here. So there's your up through the. So there's your first one here. Oh, let's have a look at this one. So here's a good one, straight down. Probably can't get anything else. So there, nice angle. Not quite right, but you get the idea. Take the buy there, get a few pips. As soon as it goes through the opposite one, start tightening things up. And you're in sell mode now. So we're looking maybe a point there to there. If we get that, yeah, it's probably not ideal. 1 touch, 2 touch, breaks there. There's your trade down. Write it down. And we're thinking about going the other way. So there's your up the high there. There's your point to entry, your first one. No good. We're trying to buy. There's your second one. Probably no good. You can have a look at doing these other ones if you wish. If not, there's your break there. Then it goes up. You're in sort of no man's land. It's just a spike up and spike down. So you could consider doing another one across there, for example. Sometimes you're getting these long trends that just go against you. You just can't do them. So it's good to use this maybe in a combination with another system with the trend trading system. Like use it with the high probability and just take, if you're in a big downtrend that goes from the left side of the chart to the right side of the chart like this, you really want to be in another sort of system. You can pick off, because this will go from oversold to overbought, oversold, overbought, even in a big downtrend. It'll do it. So you will catch up. You will catch some good trades on the downside. But like I always say, even with the high probability trading method, that grinder. Even with the high probability method, give with the trend trades room to move and keep against the trend trades really tight. Hopefully that grind is not too bad on the sound on the video. I'm going to wrap it up here, but hopefully that gives you a better idea on what we're looking at here. And again, I apologise about the background noise. All right, thanks for watching, boys and girls. And if you like the video, hit the like, hit the subscribe. You probably won't want to, but thanks anyway. All right, enjoy. Cheers.